Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys, we again will take a look at the New Zealand dollar, since we have the working setup and step in progress that we have discussed in our weekly research, and the potential of this setup is very attractive. So we were inspired by the pattern that we have on the weekly chart, that is the bullish step grabber. Although this is mostly the tactical step, it has no relation right now to some fundamentals of the New Zealand dollar and something really big picture on the monthly chart. Mostly we are just focused on the pattern per se, so just the stop grabber. But since it stands on the weekly chart, it has rather significant potential. That's why we were inspired by it and have prepared the weekly research. On the euro currency, the situation that we have discussed yesterday still stands the same. So market just has reached the level that we have specified yesterday. It's approximately 112.60, 112.50 area where stands the major resistance. So now on the euro currency, we just need to see what will happen, whether the market will stop here or will break this area to the upside. This could lead to the absolutely different consequences for the euro currency. On the New Zealand dollar, guys, as you can see, our suggestion that we have made in our weekly research right now stands on the way, because although this is a very nice pattern, and in fact this rally is the bullish grabber on the weekly chart, but on Friday market has hit the upper bottom, and we said it's probably it should show some retracement here to abandon this upper bottom situation, and before any reversal to the upside will happen, and market will continue to move higher. So now we will see that this retracement has started. Today we will try to estimate the target of this retracement. Also on the daily chart, guys, we see this nicely hidden bullish divergence with the MACD that also suggests some upward action. So let's try to estimate how deep this retracement could be. Well, invalidation point for our pattern is this bottom. So to keep this pattern valid, market should stand anyway inside of this recent swing up. If it will break it down, it will destroy the bullish grabber pattern on the weekly chart. That's clear. So it means that retracement should stop somewhere inside of this swing. So on the 4-hour time frame chart, we could estimate it a bit with more precision. That being said, as you can see that recent move up, market has reached the 127 extension of the most recent swing down. Multiple bearish grabbers have been formed here, and these grabbers suggest that these lows should be taken out by the market. At the same time, slightly below this area, we see the strong support consolidation. So this is confidence supports 171.40 area approximately. Also, guys, take a look. This is the weekly pivot point and monthly pivot point. Monthly pivot point has been tested already on the last week. Market continue to move lower, and right now we have suggested in the weekly research that probably this area should be suitable as a destination of the possible retracement. And here, guys, we could suggest, this is just a suggestion, maybe this will not appear, this pattern maybe will not appear, but right now by the shape that we see here, why it couldn't be, for example, the 127 hand and shoulders pattern, because head stands at 127 of the left shoulder, so market could hit this support area. And scrubber suggests the taking out of this low, so it could be slightly lower. Bottom, then this could be some retracement up, and the right shoulder. And this will lead precisely, this will create the agreement with a strong confidence support in the weekly pivot point. But what is more interesting that today is Wednesday, and probably this will be enough to a couple of sessions to reach this area. So it will be today's session, Thursday, and the half session on Friday before non-farm payrolls release will happen. And maybe particularly the non-farm payrolls release could become the triggering moment for upward continuation if we will get the poor numbers. So that's approximately that we could get here. Let's see what will happen. But right now with these grabbers suggesting the taking out of these lows, it's very probable that we could get this pattern. So on the hourly chart, we guys have another confirmation pattern. As you can see, very nice bearish divergence with the MACD that also suggests I'm dropping here to the downside. So let's keep watching, and for us the major area when we probably will have to make the decision on whether to take position or not will be somewhere around 171.40. Here guys, we have no intention to trade it on the short side because we have the bullish pattern on the weekly. We suggest to trade it to the upside on New Zealand dollar. That's why we're mostly speaking on the possible taking the long position. Currently we will be watching for this area. So let's see what will happen. Currently we just need to wait when this retracement will end, and by current action it's very probable that we could get 127 head and shoulders pattern. So let's see what we will get.